to our webinar on cryptocurrency and blockchain technology and the strategy that we're going to bring to you today, which is a capital protected strategy in digital assets for those who are probably more on the crypto curious end of the market. Obviously introducing Jonathan Takadena, our in-house crypto expert, and he's going to help us run through this today. This is all born out of the fact we've had a lot of inquiries lately around crypto. Obviously, Trump's pushing that agenda. More and more people are asking about it, and there is a lot more legitimacy now. There's the ETFs that have come on board, so which we'll cover later in the webinar. But this is effectively a way for you to invest in crypto without all of the risk and the noise.
Exactly.
And we'll explain some of the reasons why, particularly in cryptocurrency, Bitcoin, but then also blockchain technology, which I think is something that a lot of people don't really pay enough attention to. And that technology is very much very future based. So as per usual, content presented in this webinar is for informational purposes only. It is general in nature. We strongly recommend you seek the advice of a financial professional before making any decisions. This investment is for sophisticated investors only, S708 qualified investors or professional experienced investors. If you've got any questions, please don't hesitate to call us or refer to our financial services guide. Rightio, so the rise of crypto and blockchain as an asset class. As we can see here, global distribution, but the amount of money that's come into crypto in particularly the last 5 years, has been quite extraordinary, JT.
Oh, it's been amazing. So basically, Bitcoin is the best performing asset in itself in the history of actual financial assets in history. And it was born out just after the GFC. So in such a short space of time, it's basically just taken over the world and revolutionized and basically formed its own ecosystem and its own asset class. And what we're seeing here is that basically,
this was a survey essentially done with for retail investors, hedge funds, fund managers, whatever, over the last, I think it was last year, and it was basically whether people believe in the long term, value of crypto and digital based assets. So as you can see here, 60% respondents said yes, but I mean, look, institutional asset managers, traditional hedge fund, family offices, which are the big guys, really have come to the fore, and they are seeing a massive amount of value. But obviously, increasingly, the I do not part is very small here.
Exactly. So just as a bit of history, I came into the scene around the 17, 18 during that first ICO, and that I do not must have been around 80% at that time. So totally different how the actual crypto acceptance is there, and that's why what we found here at MPC is that usually when we listen to the customers and when they ask questions, that's when we have products that really pretty much are extremely popular. So this is actually just born out of people that are, as Mark said, crypto curious, but want to invest in this asset class in a way where you can get some upside exposure, but not be subject to these volatilities, because these numbers have just the actual acceptance of the asset class have varied widely, even in the last few months. Well.
Yeah, my history in this really, I mean, I bought some Bitcoin, and folks don't think that I made a fortune out of it. I sold it way too early, even before you got into it, but it was born out of when I was trading credit spreads back in the GFC, and that the financial system almost went to the edge of the abyss, realistically.
Yeah,
and central banks basically printed their way out of trouble. So that was where I first came across it, and realistically, it was, what attracted me to it was essentially they can't make any more. There's 21 million of them, and that's a Bitcoin, and there's no more printing. So and while inflation really does eat at your wealth over a period of time, and in history, things like silver and gold have been used as those store of values, and it was very, very funny to hear, even on Bloomberg recently, is that gold was described as physical Bitcoin. So that's how much the acceptance really is coming across. So We had some of the biggest fund managers in the world, particularly the biggest fund manager in the world, BlackRock. They launched a Bitcoin ETF, so exchange-traded fund on stock exchanges. And you can see here, we're talking for the gold ETF, which was I think was the largest ETF in history. It took something like 1,700 days to get to 70 billion. For Bitcoin,
So what's that? That's roughly, call it 8 years
yeah,
versus 1 year for Bitcoin. So it just shows you how quickly this asset class has become mainstream. Basically.
yeah. So and that was it. I mean, look, that was a huge surprise because obviously if they'd known it was going to happen that quickly, they would have done it a hell of a lot sooner, I would imagine as well. So now there is a direct relationship between Bitcoin and the M2 money supply. So just for those of you, M2 money supply is the amount of money that's in circulation. This is always compared to the US dollar. So this is on about 108-day offset. So we have seen money supply start to head higher in the US, particularly, and as they've started to repurchase their own treasuries.
Yep.
And Bitcoin has been lagging. So this chart's a little bit old. It has probably gone back up to somewhere around here, as we, so it's probably keeping in line. But very, very difficult to track these sorts of things. So, but just to show you that it does generally follow the money supply that's out there. So if governments are printing, then generally you're going to see a rise in Bitcoin from here on in.
And that's where the Bitcoiners say that's actually better than gold, in that because it's a fixed money supply. So whereas gold, there's usually a 2% increase, not an increase, but they do mine.
They mine more, of course.
They mine more. But Bitcoin is a fixed number. It won't ever increase, and basically, as more money is printed, basically that devalues against each Bitcoin. So that's where we see the price rise.
So just explain to us Bitcoin mining. So obviously when it's capped, how do they mine Bitcoin?
Okay, so how you got to think about the whole network is that it's actually just what you call a network of the cloud. And the whole thing behind blockchain technology is that you can now legitimize your holding without a third party in there. Yeah. So usually there'd be a central party,
a bank or
exactly that will tell you that actually your Bitcoin is legitimate. That's the whole thing about blockchain, is that you don't have to have the whole network authorize your holdings or a third party. Basically, the network does it for you, and that's where.
So that's the ledger or the blockchain.
Exactly, and it's written into the code that there will only ever be 21 million Bitcoins. Now, what happens is that as the mining has increased over the years, the difficulty increases, and that's written into the code. But it gets to a stage where every halving cycle, there's just less and less Bitcoin being mined. And that's why there's a limited supply, but hasn't all been mined just yet, but most of it has. So it just shows that's, we've got a big supply coming in, we've got money printing, so one has to give.
Absolutely. So this is the big part of why we're looking at all stores of value, not just crypto. Yeah. We've been big on gold, we've been big on silver for 18 months now. And this is the reason, this big red line, and this is a bit of an old chart here. Like I did this back in 2024 with Trump's big, beautiful bill. He has made it. That red line should be steepening even further. And what the yellow line is the interest payments as a percentage of tax revenue. So essentially, if you end up having 45% of your tax receipts going out as interest payments, that's never good. You're never going to hold your credit rating.
Exactly.
And that status of the US dollar being a reserve currency is very highly under threat. So obviously they've got the world's largest military.
Yep.
But look, I mean, I don't think they're going to go to war necessarily well, they could, but that's basically one of the only other alternatives, really, because their purchasing power will be absolutely destroyed by their lack of fiscal discipline at the government level. And the fact that Trump's got through the big, beautiful bill, as I keep saying, it's more like a big, beautiful bankruptcy to me. that's going to add a further $5 trillion in debt up until the end of his term, I believe.
Yeah, and that's the basics of it all. Like, so that's the reason why stores of value have suddenly become mainstream. Everyone's starting to realise the math just doesn't work.
No.
Yeah. So the only way that they can get out is actually just print. So,
Yeah.
sorry. There's two ways. Austerity, like actually, rein in and be responsible.
And actually charge taxes to the Mag 7, which dodge taxes all
exactly.
over the world.
But as Elon has shown, that they just can't do it.
Yeah.
And Trump's backflip, and he has to print now. So that's why he's come out with a big, beautiful bill. They'll have to print to pay it off. And that's why stores of value have been doing exceedingly well. We started off with gold, 18 months ago, and I was like, look, that's one of the easier trades out there. We see that even during April, Bitcoin didn't fall down, and it's back at 110. So I think it's time for another store of value to take a...
And we do have an enhanced growth strategy in silver and platinum. We have got one in gold and silver, which is about to roll off. And we're a similar strategy to this, but slightly different terms. But we're roughly around about up 100% on that at the moment. The silver and platinum one has already taken made up most of the ground, and it's got another year and 10 months to go. So we've done these strategies before here at MPC, and they're essentially what people really like about them is you know what you're putting up, you know what you can possibly lose. There's no margin calls, there's nothing, and you also get the upside exposure as if you put in a decent amount of money. So blockchain technology, or the ledger as we were talking about before, is another one. Now, increasingly, there is a significant use case, and we're starting to see forecasted size of market will grow at 68% CAGR. And I think the public cloud, private cloud, hybrid cloud, blockchain technology market, where it is an online ledger, even the ASX has tried to use it. And you can have a look at these companies here. You've got Microsoft, you've got Google, you've got Toyota, you've got some of the biggest insurance companies in the world, Oracle, Amazon, Samsung. I mean, we're talking, the biggest companies in the world are all running blockchains for all sorts of different reasons. And generally, the two that we've chosen are Ethereum because of what's called DeFi. If you want to explain what DeFi is.
So basically, if you want to go in simple terms, the Bitcoin blockchain is extremely simple. So basically, it's just a value of a Bitcoin. And what that means is that you can't actually do any transactions on there. So that's become...
Or it's incredibly slow.
Yeah, and that's also... but that's actually become a feature of it.
Yes.
So whereas, some people were like, unbelievable. They didn't believe that actual technology at the beginning. Now they've realized because it's so simple and the code is all public source and open, you can't actually tamper with it. And so what that means is that Bitcoin itself has become the store of value. But let's just say you actually want a usable database. Ethereum was the actual, what they call the computer of the internet at one stage. And then, with advances in technology, now we see that Solana's the up-and-coming new DeFi.
So DeFi means decentralized finance. And essentially, everything is stored on the ledger. So governments will even gravitate towards this, and governments are gravitating towards this sort of technology because it stops fraud. They're even looking at the use cases on the Solana blockchain for verifying images because they can't keep up with how quickly deepfakes are used.
Yeah, absolutely. Well, it's basically anywhere where trust is involved. That's the whole thing with blockchain. It's all about you can trust that your piece of the ledger can be verified doesn't have to be verified by a third party. Basically, you have a trustworthy node.
So when a transaction goes through, that is distributed to all the other ledgers on that blockchain. So you're verified internally by everyone else, essentially. And every single transaction is, for history, is recorded on that.
That's the whole appeal of the blockchain. And I think as technology improves, there will be winners, and it just gets more efficient and actually more trustworthy as well.
Yeah, I mean, they've used it in foods. I believe Whole Foods have used a version of it where they tracked on the blockchain from the source of the food all the way to the end, and you can check it on that. Smart contracts for legal as well, because obviously, I mean, DocuSign is almost a form of blockchain in itself. Where you're signing those digital documents. Supply chain, very obvious. It's being able to see end to end. and it not being able to be tampered with
absolutely.
for ports, etc. And obviously,
we help with finance here, but so there's also fractional shares going to be started on the Solana blockchain as well. So that's basically where DeFi or this blockchain is taking over TradFi as well. So that's another use case there.
So essentially, you can buy Mag 7 stocks on the Solana blockchain.
Absolutely.
So, but it's 24 hours a day. It's instant settlement, no counterparty risk. It's actually a better system. It's what the ASX we're trying to do and badly screwed up. But ironically, it will probably be taken over by the likes of Solana. But Ethereum and Solana are by far and away the two most popular. Solana's probably a little bit new wave, a little bit faster, a bit more multi-use. Ethereum, I think, very entrenched, and I don't see it going anywhere.
Well, if you just look at the amount of sort of total value locked, Ethereum is much, much larger than Solana. But the thing is, the amount of transactions are rapidly increasing on Solana. But either way, if you look at blockchain in general, if you have Bitcoin and these two, you pretty much have the foundation of, if there's going to be any upside or any downside, those three are going to be the ones that capture it.
So these would be kind of like the silver, the more industrial use, whereas Bitcoin's more the gold of the blockchain crypto world. So, and look, essentially, this has still got a lot to go. It has matured very quickly as an asset class. I don't think you would have ever seen in history something mature as much or as fast. But even to the point where I think energy, a friend of mine's deals with oil companies in the US. Everything out of Texas now has to be on the Tether blockchain.
Wow.
To come out of there. Basically, you cannot really deal because they're trying to track and keep governments accountable where Russians have been backdoor selling into China. So, there are pretty legitimate uses for reduction of fraud, etc. So now we get to the investment. So term is 24 months. And we're going to use this is for the ease of math's sake, and we can go down to the smallest clip we can do is $2,700. $2,270. My mistake. But we're going to use the example here of $22,700 gets you $100,000 exposure. So essentially here, we're going to go through a couple of scenarios. So your upside capture is 4.4 times, but what you've paid for in this strategy is that 22,700 essentially gets you that pays for your strategy, and the leverage kicks in once you get to that 22.7. So essentially, if we're looking at it here, a strong performance, say the reference assets, and you've got all three in the basket, you are marked by the lowest one, not by the highest one. It's not an average either. So you're marked by your worst performer. And essentially, if the worst performer is up 62% after the 24 months, your return on investment is 173%. Essentially, so you would be taking home 62,000 for that 22,700 investment. So, and then obviously on a weak performance where we're only up 15%, essentially you're just receiving $15,000 back, which means 7,700 you're down. Obviously, you've dropped about 33% on your investment there. If you've got a negative performance, you don't get back your 22,700, but obviously, what you're getting when you get past this 22.7 break even in, that $22,700 is now, from that point onwards, is worth $100,000. So you need to think about it in terms of it's down 100% ROI, but it's actually only down 22.7% in terms of notional exposure. So when we're talking notional, we're talking about what your leveraged exposure would be. So you can effectively, it's very capital efficient. You can put down less money to get $100,000 exposure. Okay. So if you would like to buy, for instance, if you want to buy 50 grand's worth of exposure, think about it in terms of notional and then work backwards to this number because you'd only have to put down 11,350. So to get that $50,000 exposure. So,
and one thing that we really like about this investment is basically once you invest, you're locked in for 2 years. And if you have a think about where we are in the cycle, so Bitcoin's trading roughly about 109, 110 as we speak. Trump's got roughly 3 years to go in his term. He wants, he's already talked up
he's launched his own coin.
Exactly, and talked up digital assets. So, but the thing is, we've seen Trump is extremely volatile. So what it is you just know that you're locked away. You have some upside exposure to Bitcoin. It's got a fixed downside, but the thing is, like, if this thing rallies, you've got 4.4%, 4.4 times the upside. So, really, I think it ticks all the boxes for anyone that's crypto curious and just wants to have a dabble and actually have some exposure to this store of value.
Yeah, look, and as we've said in historical moves, 22%, 22.7% is very little in crypto. And we've gone with the market leaders overall. Ethereum doesn't tend to rally quite as hard as nor does Solana, but I think realistically how quickly this has been adopted and how quickly all technology is being adopted through AI, I think we'll see. We think personally, and the erosion of the US dollar particularly, we'll see people flock to stores of value, and not to mention that blockchain technology. So there's a double investment case really. It's a little bit short US dollar because of what's going on with the government debt there and Trump and his very volatile policies. But people will want safety and they will want surety, which is what blockchain brings overall. So it's a very good way for those, as I said, who are crypto curious to have a capped exposure. So say you invest in 22,700, that's it. That's all you're up for, and you don't have to worry about it. There's no sleepless nights. Exactly, there's no margin calls. There's no nothing. And in 2 years' time, there is options obviously for early exit as well. But that really comes down to the individual. But I think this is the sort of one you want to lock away for a couple of years, for at least 12 months, and see how it goes. We have talked to the OTC provider about potentially having a half time just to see how it goes. Say if it's up 40% and rolling it into the next one, and basically restarting the whole strategy again. But look, we'll get to that when we come to it. Essentially, what we want is the 24 months, so we've got that time for this to play out and see what happens, because there's going to be a lot of different issues on the horizon in the next 12 months where. This could be a rocky road, and that's where we want that 24-month exposure.
Yeah, absolutely. So I think just in summary, you're getting exposure to three of the best and biggest blockchains: Bitcoin, Solana, and Ethereum. You've got a fixed time limit. You've got upside exposure, multiply, and it's got a max downside. So as Mark says, if you're crypto curious, if you want to have some exposure, use the leverage here because you can actually just use a lesser amount.
And then the investment banks we use as the counterparties to our OTC are usually AAA rated, if not AA rated banks. So safer than being on a crypto exchange platform.
Yeah, exactly. You don't have to worry about your losing your keys, basically.
Absolutely. So and even if you were considering buying the Bitcoin ETF, realistically, this is about 4.4 times more capital efficient. So you're not having to. You can use that money elsewhere to do fixed coupon notes, buy stocks, whatever you want to do. So that wraps it up anyway. If you've got any inquiries, obviously just give us a call here at MPC, and we'll run you through it. We expect this to close in the next couple of weeks, and just get in contact if you're interested.
Thank you.
Perfect.